Hi, and welcome to the PACE Global Advantage Market Report. Be sure to check in each week for the latest news and information that can affect you and your portfolio. We're joined today by economy expert Bob Tebbutt of Peregrine Financial Group. Bob, during August, the U.S. dollar has been strengthening, yet U.S. statistics on housing, durable goods ordered, and employment have been either record low numbers or at least disappointing to the market. How can the U.S. dollar strengthen in these negative circumstances?
Good question, basically, and it's the fundamental question that everybody should be asking when they're talking about the commodity markets. The basic U.S. dollar once was the Swiss franc. Now it's the U.S. dollar is a store of value. People, when they get nervous, they buy the U.S. dollar. So basically, where the U.S. economy has been slumping or not growing as fast as people thought it would, it got people nervous and they switched to the U.S. dollar, and consequently, bad employment numbers make the market worry, and what they do is they step in and buy the U.S. dollar, which sounds weird, but that's really what is happening in the world today. When the U.S. dollar is weakening, that usually a sign is that the economy of the U.S. is getting stronger.
Thanks, Bob. Now, what about U.S. housing? Those U.S. housing statistics are at a multi-decade low. What can we expect from the lumber in the future as a major factor in housing?
Well, I've done a study, as a matter of fact, on prices of the basic commodities that go into housing, copper, aluminum, and lumber. And essentially, the copper, aluminum, and lumber prices have been getting stronger recently. Number one, because production is down, because they haven't got customers to buy their products. But number two, because things are coming back, maybe not so much in the U.S., but certainly in other parts of the world. Certainly Canada is, and China is. So basically, the lumber market has been a little bit stronger, showing signs that it wants to go higher over the next little while. And interestingly enough, in a study I've done, which is available, the copper, aluminum, and lumber prices over the last 9 months have been virtually identical in their moves.
Now, Bob, let's talk about China. What can we expect out of the country, and what effects will it have on base metal prices like copper, aluminum, and nickel?
Well, I was looking at some numbers Friday morning and saw that the producers, manufacturers' profits were up like 67% in the first 7 months of the year. 67% is a huge profit gain, indicating that Chinese manufacturers are doing very well, producing at reasonable price levels. Exports are doing well. And let's face it, with 3.1 billion people starting to learn the benefits, if you like, of modern world economics, the growth has been double-digit for the last 4 or 5 years. There is no way that the Chinese government is going to let that ease back. They're going to continue that, and we're going to see profits on corporations grow, and we're going to see Chinese exports, Chinese manufacturing grow at an extremely strong level, and that means that demand for copper, aluminum, gold even, all of these commodities are going to be higher over the next few months, over the next few years. A little interesting statistic, they started this 2 years ago. They were going to move 300 million people from rural settings into urban settings because they needed workers. 300 million people is the population of the United States. So you can imagine how much plumbing they will need, how much wiring for electricity they will need, how many cars they will need just to get around. The market in China is booming and will continue to boom double digits for the next number of years.
Now, what I've noticed is gold has risen from $681 in October of 2008 and now stands at over $1,230. That's just a little under the record high of $1,265 in June. Is it going to continue to rise?
Again, I have a study showing gold and silver, by the way, and I kind of prefer silver over gold for various reasons, which I explained in the study. But essentially, the gold market is a market that is reflecting fear and potential of inflation. Now, inflation isn't really coming on yet because the money that's been spread around the countryside to stimulate has not been passed on to the consumer. So the demand has not picked up, and therefore the inflation hasn't shown anything yet. I mean, I think the U.S. inflation is down around 1.5%, which is really minimal at that. But the fear of inflation in the future and the fear of present economic circumstances has meant that gold has had a very steady rise from those in the triple-digit number into the quadruple-digit numbers, and is very strong and expected to continue.
Now, Bob, let's talk about Canada. Canada's economic picture is far brighter than just about every country, with the possible exception of the so-called BRIC countries, Brazil, Russia, India, and China. Canada has raised interest rates twice in the last 6 months, and yet the Canadian dollar has traded between 93 cents and a little over $1 since the fourth quarter of 2009. Can you explain why it isn't stronger?
Well, there was an old theory that a strong Canadian dollar or a strong currency was a reflection of a strong economy. The fact is, though, the Federal Reserve, the Bank of Canada, the Bank of England, the European Central Bank, they are manipulators of currencies for their own purposes. They don't go because of good economics. And I point back to the time when Idi Amin was in power in Uganda. The Ugandan shilling was rising in value. So it has no reflect on that. But what it does say is that the Bank of Canada, in this particular case, yes, they raised interest rates because they felt they had to, but they are preventing the Canadian dollar from rising on those higher interest rates by selling Canadian dollars to keep it down under par, or 1 full cent per US dollar, $1 per US dollar. And that's just a manipulation. So yes, strong economy. Yes, the Bank of Canada is worried that our exports will decline if the currency gets above $1. And yes, they are pressuring it to keep it down.
Now, Bob, what are you looking forward to next week? What are you bullish on?
Well, what I'm looking at is a continuation, of course, of the gold market. As I said, gold or silver, and I prefer silver. I just see there's going to be a little bit of a setback on silver and gold over the next few days that will provide an opportunity for people to buy. I'm also looking at the base metals, and I think copper leads the way, so I will use copper as a guideline and say that copper is going to be stronger over the months ahead. I would believe that in the next 2 years, 3 years, we will see a tripling in the price of copper. So I'm a long-term bull on that. I like lumber for the same reasons I like copper. And as far as the currencies are concerned, I'm looking for the US dollar to decline. I think the euro dollar will rebound and go higher over the next few months.
All right, thanks, Bob, for taking the time to speak with us. We'll see you next week. For more information on business news, be sure to check paceglobaladvantage.com. We'll see you next time.